What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own DD. Today we're going to talk about ticker symbol MMAT, Meta Materials Inc. We're going to break down the TA, we're going to look at the options chain, we're going to go through both Ortex and Fintel. I've got a small smidgen bit of news for you at the end, and of course, my prediction. But before we lead into any of that, first and foremost, I would like to say I apologize for the recent late videos. I've explained to you guys that I'm a busy person, and of course, life always seems to get in the way. When I'm at work, I can't do any research or DD. When I'm putting stuff out there, I am usually taking a quick break, trying to get this stuff out as quickly as I can to update you guys. When I get home, sometimes I have to cook dinner because my wife's still at work, so I have to deal with that. And then I still have to do my DD to put out these videos. So I do apologize for them being so late. I don't mean for that to happen. But I do appreciate everybody who's still, they watch them. You guys are liking them. You're subscribing to my channels. My channel's growing exponentially. And I just want to let you guys know, I appreciate you for being patient with me. All right, now let's move on to the video. Today we opened up at $5.32. We hit an immediate high of $5.43, a low of $4.88. Ouch. And of course, we closed the day at $5.11. We did that on a cool 17.5 million in volume, finishing the day down 6.5% on the day. And we did finish out the after hours down about 2%. But again, as I always say, we don't sweat the after hours. We take it with a grain of salt because the volume is skewed and none of this information is ever right. In fact, most of the time, if you've noticed since I've been covering the stock, the after hours almost always corrects pretty close to where it closed at. Almost every single time with this stock. The times that it doesn't, we get pretty good runs, but they're parabolic runs. All right, so at only one point we were really oversold today, and that was when we came down here below that $5 mark. The stock did not like being down here. In fact, right at $5, it looks to me, where's that at? Right here? Yeah, looks like is where we went oversold, right there. At that point, 510. 510's oversold. We shot down here, oversold, bounced back up, and came back up to that level where we were comfortable and traded the rest of the day. It was consolidation for 6 hours of the day, roughly. 5 to 6. This was a lot of heavy short attacks, yes. A lot of stop-loss hunting. They were trying to trigger paper hands out. Remember, we have recently started climbing from $2.80 all the way to where we are. People have been buying in at every level from there on. What happens is when these investors buy in, some new, some even experienced, they set stop losses or they're even watching it and they just don't want to lose any money. So what they'll do is when they start seeing this, when this stuff happens, then they'll start doing this. I don't want to say that this is 100% short volume. Yes, absolutely short volume. But I'll be willing to bet stop losses were triggered and paper hands sold off. Also, we got to keep in mind the overall sector itself was down. In fact, I've got our heat map up right here. Semiconductors was right here. Here is semiconductor equipment and materials. We're red. We're super red. So it's really not a surprise that we dipped. I'm happy we didn't dip further. To be only down 6.5% after being up 100% over the last 2 weeks, I'm okay with that. Let's move back over to the chart, and I want to go to this one. So I'm showing you here that over the last 3 days, and as I've said, I take 3 days to determine a trend. This doesn't necessarily mean everybody does it that way. This is just my way of doing it. And unfortunately, we have been in a bearish downward trend for the last 3 days. Yesterday, yeah, I pointed out a little bit that we were kind of moving down, but today confirmed it. So what we're really looking to happen is right now on the 30-minute scale, we're touching the 200 MA line right here. Zoom in so you can see it. We're resting right on it. What we really want to do is kind of bounce off of this line and try and get back up above the 50-day MA line. That's a little bit more of a comfortable area for us. Like you see over here. And finally, the last thing I want to show you, when in doubt, zoom out. Now, this is a saying that I did get from Wrench Capital. In fact, a few of you guys have mentioned that. I remind you of him on some of the way I do some of my videos. Well, I did get that saying from him because, like many other YouTubers out there, many other traders out there, I learned from YouTube as well. And Wrench Capital has been one of the people I have looked to learn about some of the stuff I've learned. And this is one of the things he's always said. Whenever you think that the stock is starting to go down, zoom out. Look at where you've come from and look at where you're going, okay? So we are only coming down a smidgen bit compared to how far we've come up. And in all honesty, if you zoom in, we're just gap filling. That's all we're doing. It's just a gap fill. This was a major parabolic movement all the way up. We need to bring it back down. I've talked about this many times over. Now, what we don't want to see is a gap fill all the way down to here. And I don't think that's going to happen because we created a lot of stability right in here. This is that point a few days back, because you know these are one-day candles. This is early last week, end of the week before, where we built that stable ground, that platform right there, okay? So I don't think we need to worry too much going beyond here. Now, let's keep moving on. Let's go to the options chain. Can't get any easier math than this. 35,000 calls, 3,500 puts, 90% calls, 10% puts. I can't screw that up, can I? 190% IV. So it has come down a little bit, making it a little bit more interesting. And of course, I mean, 35,000 calls is nothing to shake a stick at. A couple weeks ago, we weren't trading but maybe 10,000 calls. This is huge. I did today buy those October 15th $10 strikes. I got them at 55 cents each share. So what that means is it's 55 cents is what I paid for 100 shares. 100 shares makes up one contract. I bought 5 contracts. So when you buy a contract that says 55 cents or 50 cents or whatever it says, you always multiply that by 100, and that secures you the right, not the obligation, to buy those 100 shares at the strike price, not the price it's trading at. So, let me explain that a little bit. If I were to have bought this $10 strike and then immediately sold it, still in the $5 range, I would have lost a lot of money. Because I would have had to pay $10 per share to exercise that contract. But if I wait until the stock goes to $20, and I'm not saying that it's going to go to $20 by the 15th of October, I'm just saying, if I wait for the stock to go to $20 and then I exercise my contract, I am now buying those 100 shares at $10. And the only thing I'm losing in the whole deal is that premium I paid per contract. And that would have been $55 today. $55 per contract to secure me the right to buy this at $10 in a month if it runs to 20, and then I can sell them for double my money. I'll take it. But again, I'm not going to do that. I'm going to sell this thing off when volatility spikes, the stock starts going up and gets closer to the strike price, and then I'm going to make some money. And always remember, you do not have to sell at the strike or above. You're just selling at volatility spikes. We'll get into that another day. I promise. Let's move on to the intranet. All right, we already did the heat map. Let's get that out of there. Ortex. So we've had some updating from the last time I looked at this when I first tried recording my video an hour ago almost. Let's see here. So we've got a short interest change of a positive 6%. They returned 5 million shares. They borrowed 7 million shares with a borrow change of 2 million. Cost to borrow max today at one point was over 25%. That is huge when your cost to borrow's average is only about 3. It's about 3. Okay, so I would absolutely see this number here starting to reflect up in here probably tomorrow, because as we know, all of this data only updates once a day. This updates intraday starting at 7 a.m. Eastern time every single day. And that's why I try to get you guys an update every morning. And again, while we're at that point in the time, if you'd like a morning briefing every morning, just go ahead and find me on Twitter. I put a briefing out on Twitter every single morning. I try and get it out to stock twits. I really do, but sometimes I forget, or I'm already at work when I'm doing these briefings, so I can't always get it to them. But Twitter is the easiest outlet for me to get it to, so I put it there. So the average days on loan, is it updated? No, it's still at 20.85, like I said this morning. And that's great. That really is. It's just showing that they're still holding those shorted shares for a lengthy period of time. And also remember, they don't have to return those shorted shares in any time. They don't physically have to return a shorted share until they're forced to do so. So they can kick this can down the road for as long as they want, really. They can just keep holding shorted shares. Same with FTDs. They can just keep kicking them down the road and passing them off to other people. Yeah, we've talked about that. Let's not even get started there. Okay. Fintel. Let's hit refresh in case anything changed. Computer's been moving very, very slow today. All right, there we go. Nothing changed. Days to cover. They're showing only 0.41 days to cover. That's less than half a day. I really don't think so, considering that we do feel that the float of the stock is wrong, and the short interest may be closer to the 20% range. I'm saying anywhere between 15 and 25. A little bit towards the higher side, I think, personally. But I'm not a speculative kind of guy. There's all kinds of DD out there talking about it. I really can't wait to see it change over. I really would like to see that. That'd be really nice. So the other thing I want to cover, I've been saying this wrong. Thank you, Trey Subway Cup. This is not a percent. And I know it's not a percent, but I've been relaying the information wrong. This is a number from 0 to 100. In fact, right here, the short squeeze score is the result of a sophisticated multi-factor quantitative model that identifies companies that have the highest risk of experiencing a short squeeze. The highest risk of experiencing a short squeeze. The scoring model uses a combination of short interest, float, short borrow fee rates, and other metrics. The number ranges from 0 to 100. It says nothing in here about a percent, with higher numbers indicating a higher risk of a short squeeze relative to its peers, 50 being the average. So, we are now number 36 out of 5,500 stocks, and we are number 84.83 as far as it goes with a ranking. So, of all of the stocks, we come in 84th? No, that's not how that works. Hang on. Of all of the stocks, we have a score of 84.83. There we go. I said it right that time. A score of 84.3. Getting closer to that 100 score, showing that we would have a greater chance of a short squeeze. Still not guaranteeing it. And it shows that it does update intraday. Here's another intraday update. In fact, it was just updated. They've recently returned some shares, and you're looking at 250,000 available. That's not a lot. That's really not. And short borrow free to 3.4. So they're already showing it on here from Ortex. Ortex showing that, oh, wait, I'm looking at the wrong thing. Thinking of the wrong thing. Ignore me. Oh, good. We've already got some of the Finra data. So this is for today. Looks like, of course, we know Finra is half of our volume or more. Short volume is less than 40%. So that's kind of where I was going at earlier. I don't think it's all short volume. Some of this is paper hands. Stop loss is being triggered. And remember, once a stop loss is triggered, it creates a sell-off event. A lot of people set stop losses at key levels. For instance, right here, this is 510. This is a key level. So once it hit this, see that little green candle? That could have been your stop loss trigger. Boom. Big sell-offs, okay? So I'm not saying that everything was shorting, absolutely got shorted. Fintel even shows you it got shorted. What I'm saying is because they were able to trigger stop losses, some of it was just selling pressure. And it sucks that they're able to do that. They're able to see when you set a stop loss. And that's why I say don't set stop losses, set alarms or alerts. We are still waiting on the CBOE short volume information here. And let's move to short sale transactions. This is for obviously yesterday. Here we are, 391 transactions, 814,471 shares. And again, this is only transactions under $5,000. Or I'm sorry, over $5,000. Only transactions over $5,000. And that was a total of almost $4.5 million shorted into the market yesterday. And we held our own. We only were down less than 1% yesterday. So, yeah, no big deal. We had no new buyers, no new sellers today as far as I could tell. Let's double check. Let's go over here. Owners. I know there was new buyers. Sellers. Yeah, no new sellers. Didn't think so. All right, so on to the news, which this isn't really big news or nothing. We knew this was coming. It's kind of old news. This is from yesterday. This is that thing you can listen to from George's interview. TAC Ops East. If anybody in the area is able to go to this, take some pictures. Send them to me. DM me on Twitter. Send me some pictures. Put them up on the MMATR board or the MMAT board on Reddit. Do whatever, because we really want to see what's going on behind the scenes. And if you're able to get there, get there. They're at booth number 210. It's happening. Obviously, today's over, but tomorrow and Friday. Okay, and the last thing I want to say before we move on to my prediction is this weekend I am going to be recording an options video explaining how I look at options, what the options are about and how to trade them, and how I trade options different ways. Also, if I have the energy and the time, there may be a surprise video on Sunday. So, on to my prediction. We need to go to this chart, don't we? Yeah, we do. 5 minute. Keep moving stuff. Alright, so let's shrink this bad boy down. Probably don't need to go too much further down, but we're going to. So let's say we go ahead and we trade sideways through the rest of the after hours and pre-market, I should say, for tomorrow. Say we trade sideways. We open up where we close at the $5.11 mark. I'm going to give you my two predictions, bear and bull. We're going to start with bear. My bear prediction for tomorrow is, of course, we're going to do our morning dip. But this is going to be a little bit of a violent one, guys. I'm expecting to immediately test $4.80. I'm hoping we don't break it. I'm hoping it catches it. But because we've come so low and we're looking for it to go ahead and gap fill and retrace back to a previous level, 480 would be a nice spot for it to bounce off of and maybe trade sideways. However, I will tell you the level that I'm looking for it to go to do a full retracement would be the 465 to 450 range. I think if we tap these ranges, we'll have secured ourselves in a full-on gap fill over the last 4 days, hopefully retracing ourselves all the way back up to the previous day's close to eventually end slightly red. This could take some time, almost all day, if that happens. But what I ultimately want to see happen is just a tap of 480, test off, and trade sideways for the rest of the day on a bear prediction. Now, on a full bull prediction, and this is, I'm hoping happens, because if we go bull tomorrow, we break back into our upward trend. Here's what I see happen. I still see a dip, but I only see it go to 5 test up. 5 will be a launching pad straight to 520. Probably bounce off that for a second and go straight to $5.35, where I see a rejection. We reject at 535, probably trading sideways to lunch. After the lunch hour, making a test for 550. I think if we go beyond 550, we'd be at 565 to stop. I don't see us going any further. Trading sideways, ending in the 550 to 565 channel. And that is my full bull prediction. With that being said, like, subscribe, comment below, do anything it is you got to do. Share this stuff with your friends and family. Make sure we're getting the meta word out there. Go and visit all of the meta sites that you can. Go find the people that really like meta on Twitter. Find them on StockTwits. And bring them to the different communities. Reach out. Seriously, reach out and touch someone. Meta is the way of the future. That's all I got for you guys today. Peace.